Matron, take them away.
And a warm welcome to Morning Watch with me, Scruff. And what do we do here? Well, it's the 1st of September, and every working day I look at the coming economic news, and I also look at the strengths to give you an idea of a watch list. Now, today is an odd day because it's the 1st of the month, and there's a lot of news to be aware of, and it's Friday. So let's have a quick look at the news and then I'll explain a couple of things. So news-wise today, through the night, there was a reasonable amount of news coming through, which has kind of sparked the markets up a little bit this morning. Now, as we're going through the morning, there's a decent amount of Euro news up to around 9:30. Now, these are PMIs, so they can spike the market. So if you're in Euro, dollar, DAX, anything that's to do with the European, it will move around the London Open right the way through to 9:30. Now this runs up into 1:30 this afternoon, and this is where it gets a bit interesting because again we have decent news coming out of the Canadian, so anything like CAD US, that sort of thing, or US CAD rather, is going to spike. But then all of it is going to spike because it's non-farm payroll today at 1:30. This is UK time, by the way, guys. And as you can see, it runs in and it'll boom the market. It really will. And then that runs through to a PMI at 3 o'clock. So that today is going to be really unsettled. And that's something I want to touch on in just a second when I've shown you the strength. It's Friday. Be very careful today. The markets will be wild. And then this afternoon, you don't want to be caught on the wrong side of a trade running over an unpredicted weekend. So my advice is do your trading this morning, be out before non-farm payroll, and then have the weekend off. That would be me. I'm actually having today off. I'm not looking at any of the charts because I'm going on my holidays today. But there's a part of this that I think is important and you need to know. Now, if I look at the strengths, and I'm looking at baskets to work my way through, and I pull this down, I've had a look. You can see the CAD has raced to the top and the Aussie has basically fell off its perch. But if you'd seen over the last few days, we've been talking about the British pound, and the pound was sitting on the top and saying it could be running out of steam. It is now fell to second off bottom and it's dropped a whopping 26 points. When you see something that's at the top of the tree and it's just got there and it stays there for a while, eventually it'll run out of steam and it'll drop back. Now, that's where these strengths come important because you can see the movement in the market behind it. Now, at the moment, it's pulling out the CAD Aussie. So the pair will be the Aussie CAD, but it's a very low ATR. It's not going to move much. So look at the hourly for an entry and take it from there. But there's nothing else in the basket, which then flips it over onto your majors and you go back to your normal stuff. And it's pulled out the pound JPY and pound US cable as best contenders for today. I'm not looking at charts today, not too much. But what I want to touch on is the prop industry. Now, I did a video yesterday for you guys where I showed you how I was taking money out of the prop and putting it into an investment tracker, which is Vanguard. And the reason why I do that is because I don't like my eggs in one basket. You know, and I certainly don't want my eggs in an industry where it could potentially get lost. If I've got my funds in my normal brokerage accounts, they are protected under banking laws because I live in the UK. But the same applies. I don't hold money in my brokers. I only hold in my brokers what I need to open up the accounts. Everything else is kept in a bank account. The prop industry is the same. You know, if you've got money to take out, take it out and put it in a bank account, because my Forex funds was put on a freeze yesterday due to sort of an ongoing investigation. Now, this is going to open up a floodgate, or at least I believe it'll open up a floodgate, because essentially while they're looking at something, they've been frozen from taking on any new clients, etc. The fallout of this could be massive across the prop industry. Now, I've said for a long time, I'm not a lover of the prop industry. I don't like the way it operates, because when I first started, if you did anywhere from 15 to 20% in a year growth, you were deemed a rock star in a year. Then the prop industry comes and they expect you to do this in 30 days. That implies gambling, and gamblers never win, ever. The 5%ers who I've got a lot of time for, and if you are going to go with the prop industry, it's the only one I put my name to. I'm approached time and time again by prop industries to actively sort of give them a good name and one thing and another, and they'll pay me to do it. And the guys in the squad will testify, because I've shown them the emails where I turn them down. I thank them and I'm flattered that they think of me, but my soul is not for sale. So I turn them down because I don't believe in them. And if I don't believe in them, I can't put my name to it. I do believe, however, in the 5%ers, because I know them personally and I know the ethos of what they're trying. And they're actually ahead of the game when it comes to KYC. And if you don't understand what KYC is, it's know your customer. What that means is it's that they do due diligence and they look after what's going on. It's why they put in certain criteria to their programs, daily pause, things like this. It's all to protect and be ready for when regulators come, because trust me, they will be coming. And if I was to put my name out there, I will still say I trust the 5%ers, but I don't trust any of the others. None, not at all. But when it comes to money, I will always say it's your own funds first. And then from the broker, only hold in the brokerage the amount of money you need to open up your positions. Anything supplement to that, keep it in a bank account that is separate, and at least your money's always protected. You can always top it up. You know, if you have a bad week, you can top your broker up, but your money's still protected because the bulk of it's in the bank. And I do hope that makes sense. And I wanted to bring it up because it's going to be a buzz around the industry, and just clarify. Always be careful. Now, if you're chasing money and you're seeing the big funds and all of this all the time, you've probably failed anyway. So it's a good thing. And I personally welcome the regulators coming in. I welcome the regulators coming in for ESMA because it stopped the gambling. And that's it, guys. If you're gambling, you're going to lose, period. If you're trading as a job, well, then you'll get paid as a job. So it's a little one just to keep you running. I'm going to be taking a little break, and I'll come back. I'll cherish all your thoughts in the comments, and I will answer every single one of them. But if I'm a little bit late, it's because I'm taking a break. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.